Do you notice your your bank account balance evaporating? We go to the grocery store, we go out to eat. I got a kid in school. It's like my checking account evaporates starting the first when I start receiving my income. And by the 15th, it's gone. And it's all in my refrigerator. It's in my gas tank. It's in the activities we do as a family. Inflation is real. And tomorrow, the CPI comes out, Consumer Price Index. Then the PPI comes out on Thursday. And of course, the Fed minutes will come out tomorrow as well. And it'll give us some indication of where the Fed is going with interest rates. In this video, Mark and I have a discussion about the CPI, about inflation, about commodity prices, about how do you hedge this, and about how do you survive a 10% plus inflated in real inflation environment.
Go ahead.
What we're covering today is the inflation event of tomorrow, which is the CPI number, along with Fed minutes. And so we wanted to go through a couple of different things that we're seeing so you could be prepared and really you'll prepare your portfolio for what potentially is coming. So I'm gonna Mark, you were talking about the
Sure.
Cleveland Fed, which
Yeah, they kind of
um
track the CPI
yeah,
and predictions on the CPI, and you can go to their website, which is right here, the Federal Reserve Bank of Cleveland. Okay, and it comes through and talks about CPI and CPI reports. You can get all their data download, and you can see when we come down changes for the past 12 months on the CPI. Uh, we've dropped down from December. We came up from 3.1 to 3.4 in December, and then we went to 3.1. February was 3.2. So we're moving up. So if we get to 3.3 or 4, it comes in hotter. That'll be 3 months of inflation coming back up. Okay. And that's a whole quarter. 3 months is a quarter of inflation. And that's not going to look good for the Fed to watch. And then you take, the CPI less food and energy. That's the core. And you can go, here's 3.9, 3.9, went down a little bit, 3.8. But if it comes in hot and in the way that we've been talking, you've been listening to the Fed governor speak this week. They're not exactly dovish on what they're doing. You hear a lot of comments about, well, we're still planning on lowering rates, but there's no hurry, or we're going to wait for more data to see. I mean, so there comes a time where if this comes in a little bit hot and you have 3 months, and then you look at the jobs reports and see that the jobs situation is still hot, they may have to raise rates, to curtail inflation. What do you think about that?
I if their whole mission is to curtail inflation and unfortunately from what I see, they don't look at the real numbers of what true inflation, us Americans who are living our daily lives are really paying in costs. You can see that in the less, CPI less food and energy. And my answer is that's the majority of what I spend my money on, and you're excluding it. And I think at some point they're going to be faced with having to maybe make the decision of saying, we've been talking about 3 rate cuts this year, but maybe it won't be 3, but rather 2 or none. If they were to go into the language of we're going to potentially have to raise rates, well, that's going to filter into the equity markets and fixed income markets. And that to me that's when the fireworks will, in a negative way, will go off. Uh, And
But you
that's
kind of
my
already
concern.
you're kind of already seeing that in the 2 year, the way that it's popping up.
Yeah,
It was at 4.5%, I think, earlier today,
yeah.
overnight.
Well,
Um,
we're at that sort of low end projection of the 2 year, which I have at 4.53, but it's the top end at 4.83 that we could see in the next 24 to 48 hours. Well,
right.
that mean, you take that into account with where the 10 year has moved from in the last, what, 30 days or so, where it was down around 4.08 or so percent. We're now, we're, well, I think it was at 4.48, I think earlier this
Yeah, because
today
I
or
think
yesterday.
the 30 was at 4.5.
Yeah. So we could easily see 5%, which to me is that indication of, okay, we're not going to see a lowering of rates anytime soon. And we could potentially, especially with the cost of goods and services, we could see an increase in Fed funds rates, which I think would totally blow the market up, because it's
Well, yeah,
opposite of
I don't
everything.
I think they're going to say as few things as possible to not say that, and try to blow the market up. But then you have like Jamie Dimon yesterday. He came out and he said rates could be up to 8%. This is Jamie Dimon of JP Morgan,
I mean,
in his annual shareholder letter.
you think about his position in the world, in the economic world, his power he has, and he's saying 8% potential. I mean, that's like, that would be like the CPI coming in tomorrow at like 4%, a major jump. Um, that would be really bad.
Yeah, I mean, but who owns the Fed? The Fed is owned by banks. Banks are the
Right.
shareholders. And who's the biggest bank? JP Morgan.
Yeah.
Okay, so who would better know? Um, when you
Which,
think about it, look, I mean, the markets. This is the day before the CPI, so this is Tuesday, um, and the markets just took a dump. The markets aren't looking. And Monday they were flat. So
yeah,
uh, what is the trigger that finally all this data we've been talking about, and we're going to have a soft landing and everything's apple pie and Chevrolet. When is the data going to turn, and how do they explain it? Can't be transitory if it's 3 months in a row and
right.
data is going up. I mean, we can look at you and I, and everybody who's watching has been to the grocery store, and we've been to the gas station, and we'll show a couple charts here in a minute to show you what's happening. And Thursday is the PPI is coming down. That's the producer price. So if the producer price goes up, that's going to go. That's just the precursor to the consumer, the CPI.
Yeah.
You know,
So that's
I
the
mean,
producer
we can have
price
a
index.
double edged
So
whammy today. Yeah,
that's the manufacturer element of what's it kind of cost for me to manufacture XYZ product, which
pretty much
then
raw
bleeds
materials.
into the consumer price index. And that's what you and I and everybody else watching this pays.
Yep.
So it's sort of that domino effect in a sense.
Well, let's look at a couple commodities, because commodities are the raw materials that manufacturers use or builders use uh, to manufacture their products. And let's just go take a look at a chart or two
Okay.
and see what's been happening.
All right.
We'll start with wood, lumber. So let that come up here. Okay, so here's lumber over. I mean, we're starting over here. This is February, beginning of February. You can see the price of lumber and wood. We've come up, we've hit the intermediate resistance level and kind of gone sideways, but this hasn't been factored in. Okay, this is March information right here that we'll get, and the PPI probably will be, what we
Yeah.
see in wood. What else do we use? Copper. Here's copper. Okay, since March started. Same thing. You see what happened to copper. These prices will be reflected throughout the system. And right now, you can look at it and say, well, these prices haven't been reported yet. They'll be reported tomorrow or next April or in
Yeah.
April. But here we go again. Let's look at gold.
This is one that is hitting what all-time highs now.
Yeah, I mean, it blew right through. Its intermediate resistance came up. Now we're hitting some sell orders up here, but we'll see if it comes back down. Normally, when it hits my line in the sand, it'll pop up and then it'll come back and even out and then come back. We'll see if that happens
Yeah.
with gold. And then equally, silver.
Yep.
I mean, it's a down day today. See, silver again went up and look, it hit right where the sells were. It came back down to the Bollinger Band. Again, this is what we're seeing. And one more, we'll go to
And something I want to point out is the timetable of these charts. This is going back
yeah,
to February,
yeah,
correct? So
yeah.
since
It started
February,
start, yeah,
we've seen money rotate into these commodities, or gold could be considered a currency, but
yeah,
we're seeing that rise into it, as well as we're seeing a increase in Bitcoin in
yeah.
particular.
This is the year chart of Bitcoin. And so right here is about January. Okay. Of
Okay.
course, we had the ETFs come in right here, and off we go off to the races. And it's been kind of trading, in this consolidated pattern above the 9 here lately, and we'll see what happens with Bitcoin. But again, it's digital property and commodity is uh, what it's looking at, as
Yep.
far as classification. Um, so, uh, and then we can look at let's look at just some. This is soybeans. Let me go back just a year on soybeans. You can see soybeans came down, had a little bit of a pop. Okay, and this is in March right here.
Yeah.
Okay, so soybeans will have a little bit. Where we start here? This is March. This is March 1st right here.
Okay.
So there's soybeans. Let's look
And
at
and this
corn.
is not included in the CPI, is it? Because it's
Well, I
considered
mean,
food.
it goes into food. I mean, you're gonna corn and soybeans, and that goes into feeding cattle and livestock and feeding people and going into your cornflakes and Rice Krispies and all that.
But when they
Here's
report,
corn.
like they emphasize the CPI minus food and energy.
That's the core. Yeah. Yep.
Yeah.
But, okay, let's not eat and let's not drive.
Right.
And
The
that,
reality
is what?
is
Right, right. And
yeah.
let's do one more. Let's go wheat. There's wheat.
Okay.
So again, it's a downward trend, but when we start right here, this is March, starting in March.
Yeah.
So the prices have been going up in commodities. Okay.
So
So,
if you're looking at wheat in particular, or corn, and the trend it's on right now, what would cause those to really break through some resistance, some 50-day moving averages, and really turn the trend of corn, which we you saw in corn, it was more of a downtrend over time, but in March it has pivoted. I mean, does that, if we break, say, over, I don't know if it was the 50 that I saw that was well above where it was today, does that trigger now we're in a recession kind of
well,
environment?
I mean, you can see here, I'm going to
What's the
zoom out a
red?
little
Oh, the
bit.
red's the 200. Yeah.
Yeah. Oops,
Okay.
where'd my chart go? Let me come down here. 3 months. So you can see we just crossed over the 50 here. We're still above the 50 on wheat.
Yeah.
Okay.
But
Corn, we're right on the 50. Okay. So the 50's been down sloping. Now you're seeing it kind of flatten out.
yeah.
Right. But the 50, the 9 and the 20 all in one spot right here. So again, you got to kind of move out and see that we've been uptrending on uh, these commodities, which is our food. Okay.
Yeah.
So, let's look at one more. I'm sorry I did this. Let's look at oil.
Okay.
Sorry. Let's look at oil. I'll come back here. Here's US oil. Okay. Here's March.
Okay.
So
Wow.
you can't say, it came right up to the immediate resistance line. Look at that, even on commodities. And
I
it
I
came
fi-
sideways.
I filled up
But this,
Sunday noticed that I was paying about 30 cents more than I was a week earlier. So
Yeah.
this is an
And
example of how that translates over.
yeah, and we're in April. Okay, so driving season hasn't even started yet, which starts mostly on Memorial Day weekend through the summer.
Yeah,
So and then you on top of that, we've got international conflict. We had Israel bombed an embassy of Iran, and Iran's they're gonna counter strike, and we've got issues in Ukraine, we've got issues, with Taiwan, and it doesn't take much to flare an oil price up. And I think oil is one of the biggest things that will contribute to your personal inflation, okay,
yeah,
because we all have to drive, along with food. Let's say let's say something happens over in Ukraine again, and the wheat price or the wheat shipment goes down. Okay,
yep,
people around the world, rely on that. I mean, they're the second or third largest producer of wheat, Ukraine.
yeah,
Okay, so these things can happen. We're seeing it every day. I mean, uh, again, you just said you went to the grocery store, and it was a shocking experience. And I try
yeah,
not to go to the grocery store because I don't want to be shocked. But I
yeah.
do go if I fill up a lot of equipment, and it costs a lot of money.
Yeah, I think that, and that's, if you're like yourself, you're surrounded by farmers, and
Mm-hmm.
those costs to farm and to plant and harvest, when they go up, they're going to transfer that cost over to us, the consumer, and that's going to cause it to go up. So really so if I'm going out 3 to 6 months, based on some of these trends we're seeing in the commodity market and based on what we're seeing when it comes to battling hedging inflation with gold or silver or Bitcoin in particular, in these three particular situations, we should expect by end of second quarter, end of third quarter, definitely higher prices, which then would possibly cause the Fed to go, okay, we're not going to lower rates anytime soon this year. Or worst case scenario, we're going to raise rates. And going along with what Jamie Dimon says is, we could see 8%. And he's probably in the know better than most.
I mean, we're just a couple of doo-wops, and we can see that we can read a chart and see what's
Right,
happening. We can go to a store and see what's happening. I don't need to have Steve Leisman, put lipstick on the pig every time there's a report come out and tell us that we're doing great.
yeah,
When I can go and say, I know what it was 4 years ago or 3 years ago, and it ain't what it is today. It's a lot
right.
more. Look
Well,
at your homeowners insurance. Look at housing
oh,
costs. Look at your property taxes. I mean, seriously, anyone who tells me that inflation's going down doesn't live in the real world.
yeah.
Okay.
And I think that's one of these things we've talked about in previous videos here recently, is the buying power element of this.
Mm-hmm.
And speaking more in what is my buying power versus my return. And what we're seeing is a declining buying power of the US dollar. And because of the rise in inflation and the goods and services that we buy every day, we're seeing that widen, which means our buying power is declining, which puts more pressure on us from a long-term perspective to be to get the returns that we need for, say, retirement or future needs of that money. And so I think that's, to me, that's really the thing that rings out, is what is the buying power of my portfolio 10 years from now when I'm
Well, I mean,
65.
it goes right to, I mean, as far as buying power, the devaluation of your dollar, is it getting any better? No. We are
No.
spending, I mean, our debt is going higher. Okay. And it's starting to go exponentially higher. Okay.
Yeah.
We've gone in the last, what, 5, 7 years, 11 trillion more in debt, which is more than we've done in the history of the nation like that.
Yeah.
And so what are we doing? We're printing more treasury bills than we ever have as far as dollar amounts. Okay, we talk about that on the Platinum Channel every Tuesday and Thursday. Is Treasury Tuesday, Treasury Thursdays, and and you go and you get your 5.5% in your treasury bills. Uh, but still, that's not enough to put up with what I consider. If you go back and you look at how they calculated inflation maybe in the 70s or 80s, we're probably at 12% inflation right now. Okay. And not the 3 or 2 or whatever. I mean, it's smoke and mirrors for me because I'm like, I don't know how you get 3% when what we're seeing is what we're seeing. Okay. And we live every day. And
Yeah.
then on the other side, with this inflation, okay, let's say inflation is 12%. Let's say it's 10%. So you have 10% less purchasing power, you and your wife, to go. Okay, you take $100 to the grocery store, you start at 90.
Yeah.
Okay. That doesn't even take in effect what the devaluation of your dollar is because we're putting so many dollars in the market. We're making so much more out there. I mean, think about it. You know, if you're a if you're a manufacturer or something, okay, and you manufacture something that everybody wants, okay, so the demand is higher than the supply, your price goes up, okay, so you make more, okay,
Right.
production's rolling, and then all of a sudden you've got an oversupply and there's so many out there that took the price down for you. Well, that's not happening in the dollar, okay.
Yeah.
They're not cutting back on spending. They're not stopping the printing. Okay, they're not making the hard decisions on where to cut. They just keep spending and borrowing.
Yeah. And
You and
and
I
I
couldn't live that way, Trent. We couldn't. How long would it take for you and I to have our house taken away and we'd be broke? If we ran
right.
our households like that.
Right. And very quickly. And that's the thing is, how does that how do you fix that? In my opinion, we are beyond fixing it. Like like how I mean, how do you if we're adding $1 trillion every 100 days now
We
to
are.
the debt level, which is what we're doing, or the United States is doing, how do you fix that? How do you stop that? And I honestly am like, we're beyond that point. So does that mean that, you know, your scenario of 10% inflation based on how we used to calculate inflation in the 70s, plus a declining US dollar on average of what, 10%, we're really in a 20%, am I saying this right? 20% inflationary environment. And
Well, as
we
far as your
every
purchasing
year,
power,
huh?
as far as your
Purchasing power.
purchasing power goes, yeah,
Yeah, so we're at 20% declining purchase power. And here's the thing is, if my dollar can buy 80% or 80 my dollar buys 80 cents worth today, in a year from now it's 20% lower. It's not 20% lower off a dollar, it's 20% lower off 80 cents. So now I'm at what is that, 74%, no, 64% buying power. We
yeah.
quickly go to zero if we continue this path. And I think this is why I would not be surprised. Now I'm talking through this with you. I would not be surprised if you see gold, silver, and, Bitcoin. You and I both are pretty in love with Bitcoin right now and have been for a long time. But those are three, along with other commodities that could really hit, like wheat and corn are below the 200 simple moving average. We could see it quickly getting to that 200 and blowing through it. And if you're in a equity bond portfolio and you're not buying commodities, you really could be in serious trouble for a while. I
Okay.
mean, am I off my rocker on that? Or is
No, I don't think so. I think, from my point of view, the equities market is overbought right now, or I mean, it's way too expensive for me to be in the equities market right now. I mean, I look at what's happened in, the AI, which is cool, but I don't see any of that coming through to the monetization of the companies where they're actually showing that. You look at Apple now, Apple's had, sideways to negative, lower earnings for the last several quarters, and look at what their stock's doing. Okay, it'll catch up to you.
yeah,
Tesla, look at Tesla stock. Okay, so if these guys go down, what's going to hold the market up?
nothing.
We talk about it all the time. Money flows to where the value is, and money's flowing to where the value is. And right now, you can see it's flowing to, it's gone to commodities, it's gone to Bitcoin. Okay,
Yeah,
with the new ETFs that have opened up. And again, those are so volatile and they're so new to people. It's going to be interesting to see how people react if they get into a Bitcoin ETF and it fluctuates as much as the price of Bitcoin has fluctuated, it's
Right.
going to fluster people. Okay, and so you're going to see a little volatility in that. And but when you look at that again, we talk about it. We talked about it until we're blue in the face. Bitcoin has a limited supply. We can't make any more than 21 million. 7.8 are gone, and it's got an increasing demand. And who in this world who had a manufacturing or producing a product would not want that? Okay, that's
Yep.
why Picassos are so expensive. Okay, that's why limited edition Ferraris are so expensive. Okay,
Right.
uh, that's why
Well,
gold coins, rare gold coins, or Mickey Mantle baseball cards, the first edition in the package is so expensive.
yeah. And you can even, Bitcoin's one of those that people are, fuzzy about or poo-poo the idea of it. Let's just take that to some commodities. Let me show you a chart that came up on Twitter the other day. Let me see here. Um, that this is a listing, and to give credit to the guy who or the newsletter that put it up, this is Kasabi letter. Anyways, this
Abasi,
is
yeah,
change in prices since 2019 by food item. Cocoa, 345%.
that's
My
your
Does that
chocolate.
mean my Hershey bar or my Snickers bar that keeps me from being hangry is up 345% since 2019?
What do you pay for a chocolate bar?
I
I
don't
don't eat
know.
it, so
I don't know. I'm gonna find out though. But orange juice,
orange
260,
juice.
olive oil. Now we buy a lot of olive oil, and I can attest to this. Olive oil prices have skyrocketed, especially in the last year. Sugar, fruit snacks, cooking oil, chocolate bars, probably. Applesauce. We just bought some applesauce for Carrie yesterday. Um, it's not cheap at all. Beef. I don't buy
Yep, we
beef
knew.
anymore because of the prices of what beef prices are. It is rare that we eat steak at home anymore, and we used to eat it
We
once a week.
I live in the middle of beef country, so I have my rancher friends. I can buy side a cow or something. It's more
Yeah,
expensive than it was year to year, but I still get a better deal that
yeah.
way.
I just don't have the space to put a side of a cow in my house. But
Well, yeah,
even like mayonnaise, that blew me away, up
yeah,
50%. And eggs, I eat typically 2 to 3 eggs a day.
so do
Um,
I.
and I can see that. I can see that, a pack of eggs that we used to buy was in the $4 to $5 range, a handful of years ago. It's now close to, $8, $9. And some days it pushes $10 for a dozen. And I'm talking like more of the quality eggs, not the, kind of thing.
Not the ones I eat.
Yeah, I'm a little bit of I've become more of a health freak in a sense. But this is every American is experiencing in one way or another. And yet, I don't think that's not being recognized. And
That sure isn't 3% inflation. That's for sure.
no. And I think that's like, how do you allocate your portfolio if you're a intermediate to long-term investor with this rise in inflation, this decline in US dollar buying power? You I look at it and I go, how do you allocate? Do you just ride it out in tech, or do you? I mean, Carrie and I talked about this morning about at what point is the demand for NVIDIA's chips going to decline? What is the trigger that says, you know what, we don't have the demand as we did because the consumer is not demanding it? If the biggest
Or or
go,
you have competitors that come up and they start taking your market away a little bit.
yeah, I mean, right now NVIDIA is pretty dominant for what they do, but Amazon, Microsoft, Google are big purchasers of servers, which servers like Dell and MSCI buy the chips. Well, at what point does Amazon say, we're not filling capacity, so we don't need more? And I sort of wonder if this quarter or third quarter will be where the chip makers and the big seven minus Tesla, who actually is interesting how that has pivoted here recently. Not to say it's on an uptrend anyway, but it has made a pivot in the last couple of weeks. But where do they come out and say, our demand is starting to wane a little bit, and we're not expecting as much in the coming, 4 quarters ahead now. To me, if they came out and said that, that would be like the Fed saying, we're going to raise rates 25 basis points.
Well,
So I don't
yeah,
know.
it's well, I mean, that's why we're here. That's what we
Yeah,
look at. I mean, we're just two regular guys trying to live a life with, like everybody else, and try to understand what they're
yeah,
not telling us, and
yeah,
I came from a numbers background, so I can sit and look at numbers and I'm like, I don't see the same thing, that CNBC is telling me. I
yeah,
just don't see it. And so that's why we're here. That's why Best of Us Investors is here. And we have a huge, huge group of people, especially in platinum, from all walks of life. And just talking to them and their experiences
yeah,
has been awesome for me because we are not the experts on anything at all, but we certainly have as a group a pretty good group of experts moving
yeah.
around the country and the world who really contribute well.
We had a gentleman who joined the Carrie's call on Friday, and he just retired, and he was I guess, a distributor of chips. He was a chip salesman, and he worked with Apple and all these other companies selling GPUs and CPUs, and that's what his career was. And he talked a bit about that on the call, on Carrie's call, and you can go see that video. I actually turned it live the other day, on Monday, actually. So you can go watch that whole call. But Tim talked about the industry and what he saw. And and it was really insightful because it's another perspective. It isn't just three guys who have their perspectives. It's bringing the whole group of people in. I think that's why
Right,
this is a powerful element. So
right. And we have on Platinum Channel, we have Bob owns businesses. He owns businesses
yeah,
on the East Coast, and he gives us a really good
he gives us a
synopsis of
honest opinion.
yeah, yeah, and he makes things that people need, in
Yeah,
manufacturing and everything. So he has a good pulse,
yeah,
a finger on the pulse of the economy. So, we don't have to rely on, reports from the Department of Labor or the Department of this or Department of that because we have the Department of Best of Us Investor
right.
participants.
Yeah, and I mean, honestly, I think Robert's been pounding the table a bit about this for almost a year now,
Right,
about the decline in manufacturing of, in particular, his product, which is involved in everything.
right.
So yeah. So anyhow, in the coming weeks, we're going to see some changes in our offering with Best of U.S. Investors. We're going to go down to one subscription level. And because this is where the value is always being funneled, so in the near future, we're going to be really going down just to the platinum offering. And that's probably going to happen in the next 2 weeks or so. So if you're not a platinum member now, I would encourage you to subscribe and take advantage of our 50% discount for 3 months and really get involved with this because I'm sitting here thinking about where do you allocate right now? Well, way different than what they're saying on CNBC. I'm looking at the commodity market going, wow, this could get really a great hedge against my bond portfolio and my equity portfolio. So those are the kind of things you're going to get from being a part of the Platinum channel. So, Mark, you got anything, last
Nope, I'm
words?
just looking forward to tomorrow and seeing what the CPI does, and everyone, buckle in and you know utilize what we teach you as far as support and resistance levels, and have your limits and stop set so you can ride the ride the good graces of the market up, and when it's time to get out, you get out, before you get a loss, or you reduce that amount of loss, and keep the money in your pocket and not in the money in the pocket of Wall Street.
There you go. All right. Well, thank you for joining. Subscribe. You can get that. Hit the subscribe button on for YouTube, but also take advantage of the Platinum Channel discount below in the description. And we'll see you later.
And cut.
Cool.